A very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra. With me is Mangalam Malu. These are the top stories that we're tracking this afternoon. Midcap straight flat on expiry day, while Nifty remains under the 17,000 mark. A rush to safety props up consumer stocks, while metals remain under pressure.
Zee Entertainment fires up on reports that it is set to repay IndusInd Bank's $10 million. The NCLAT had stayed an NCLT order admitting insolvency proceedings against Zee.
ICICI Prudential Life picks Anup Bagchi as the new MD and CEO. Bagchi will take charge from current MD and CEO N.S. Kannan in June. The street cheers the leadership change.
Samvardhan Motherson continues to remain in focus. Tanks after promoter Sumitomo Wiring Systems sells about 3.5% stake in the company.
Patanjali Food bears some losses after tumbling in early trade as exchanges freeze promoter shares over its failure to meet minimum public shareholding norms. Patanjali tells CNBC-TV18 it will become compliant as promoters plan to sell 6% stake over the next few months. Well, a very good afternoon. It seems as though there's some amount of semblance of sanity coming into the markets after what we've seen in terms of a lot of volatility in the past couple of trading sessions. So we have the Nifty, which is up around 17 odd points. But remember, it's been a tight range. It's been volatile within that range. We have the Bank Nifty also, which has recovered a little bit. So it's above 39,000. Largely, you'd have to say that we're just about taking a breather as of now for our trading session. Let's see what the rest of the 1.5 hours hold. But as of now, it seems as though there's some amount of stability coming in, Mangalam.
There is some amount of stability coming in, and it's important that, we are using the 17,000 mark as a fulcrum. That's primarily because it is also weekly options expiry. A move either way could trigger a bigger move on the other sides as well because of the options that have been written. So we'll monitor how that pans out. What's interesting, however, is the pace with which the mid-cap index has picked up. Over the last few trading sessions, we've seen the second half of trade usually go to the bears. If we do not fall from here, can this reverse course and go to the bulls or not is the big question. The mid-cap index usually is the foreteller of how things usually move at the high point of trade. Let's talk about the mid-cap space itself. Mid-cap movers, that's what we talk about every day this hour. So Vivek joins in as always to tell us about the stocks that are moving around in trade. Vivek.
Well, thanks for that. The flat trading session, mid-cap index is doing well, but the small-cap index, struggling. Today, some stocks, mainly on the back of news flows where you're seeing most of the action. Man Industries on the back of the order win. Heikel, continues its up move on strong volumes for the second straight session. And Chemplast Samar today up, another 4.5%. One section of the market or one sector that's actually seeing some revival as far as buying interest is concerned is actually the pharma pack, especially some of the smaller names here. While Aurobindo Pharma continues its up move from yesterday, Ipca Labs and Solara Active today are doing quite well in the session. Some of the stocks that are buzzing on strong volumes today, after a while we are seeing Dabur move up strong in today's trading session. Newgen Software, a small broker, has initiated coverage on this particular name. Seat Tires continues its up move. Aptec and Zee Enterprises, you just saw the news come in, but very strong volumes in today's trading session in this particular name. On the other hand, some of the stocks that are seeing a bit of selling pressure, Samvardhana Motherson after the block deal, the metal pack, seeing a bit of meltdown, Hindalco, JSPL, as well as Vedanta, all seeing significant selling pressure.
Okay, all right, Vivek, thanks very much for that. So those are a lot of stocks which are buzzing around in today's trading session. Well, let's get in a technical check. Then we have Pritesh Mehta of Yes Securities joining in to discuss what he would be strategizing today. Pritesh, hi, welcome to the show. Well, the European markets are probably going to see some stability because the Swiss Central Bank is stepping in when it comes to Credit Suisse to really support them. And that would bode well for our markets in terms of stability and sentiment as well. In that context, how would you approach today's trade?
Yeah, good afternoon. Now, see, when we look at the last few trading sessions, yes, the screen is completely red. Yes, the volatility has been increasing, but rather than getting panicked by this sharp decline in our markets, I think we are reaching a point where demand is seen. So I'm looking at the zone of 16,850, 16,900. So there is a presence of 2-year mean. There is 3-digit GAN number. The midpoint of the entire rally from the June low to December peak, it's placed around 1600 level. So I think we are reaching a zone where we could see some stability coming in, and in fact market could stage a reversal. So from this level, we should be thinking of buying rather than thinking of creating short ideas.
All right, you're thinking of buying now, and as we speak, Well, we are a little above the green line. It's been a little choppy. What stocks are you looking to buy right now, Pritesh?
See, when I look at the ratio of midcap versus Nifty, it is reversing, and midcaps are doing very well. In fact, if you keep the banks aside, midcaps are the one which are showing strength. So I believe that midcaps has some legs on the upside. When I look within the midcap basket, something like United Spirits is very interesting. The stock is holding around the midpoint of the entire move from 2020 2022 peak, and then it is stabilizing around the pre-COVID high. So there's a possibility 10 to 15% rally setting in this for the counter. And second stock from the large cap side is Asian Paints. It's a slow and steady mover, but it is now taking support around the 3-year mean. We can see some sort of momentum coming in this counter, and we can see a rally of 12% from here on.
Okay, a lot of stocks buzzing around today. Thanks, Pritesh, for joining in and telling us more. Well, we need to take a short break now.
Yes, we take a short break, and on the other side, we have Gauri Kirloskar, who's the managing director of Kirloskar Oil Engines, joining in. Welcome back. You're watching us here on Midcap Radar. Let's talk about one of the midcaps which has been in focus, a big mover this year. Over the last 52 weeks, the stock has nearly tripled, and we are talking about Kirloskar Oil Engines. But before that, let's get you some important news that is coming in. Sources say the government is unlikely to extend its emergency credit line scheme beyond March 31st and is set to promote a non-emergency funding scheme for MSMEs. Sapna joins in with those details. Sapna.
That's right. The sense that we have gathered as far as the CLGS is concerned, that maybe there won't be a requirement to extend it beyond March 31, simply because the economy has recovered and there is no emergency, COVID-led emergency as such under any of the sectors which are covered by ECLGS, and those sectors are far and wide. So all set together, we should also keep in mind that the finance minister in last year's budget had extended the scheme only till March 31, and in case there is no further extension, then obviously it will sunset naturally. But I would also like to add a caveat that no formal decision has been taken on this. Since quite some time, the government has told the NIBM to do an assessment report, and once that's ready, probably a call will be taken. But March 31 is not very far away. So in all likelihood, this could be allowed to sunset. That's one. Second, it's not that there is nothing that the government has on its plate. Last year itself, the finance minister had announced a 2 lakh crore MSME scheme, which is going to be operational from April 1. And there again, collateral-free guaranteed loans, additional loans of up to 2 lakh crore are available on, on an interest rate which is 1% lower. And for that, the government has said in the budget it will be infusing 9,000 odd crores in the trust fund for MSEs, for small and micro enterprises. So all said and done, I think the government is keen to promote a non-emergency funding route rather than just hanging on to ECLGS, despite the fact that there's enough headroom available and contrary demands for extensions have come from the administrative ministry, which is MSME. But ultimately, this is a call that will be taken by the finance ministry.
Okay, all right, Sapna. Thanks very much for bringing us this story. Well, let's move on now. Let's get your corporate conversation. Kirloskar Oil Engines, like Manglam was pointing out, it's been quite an outperformer. In fact, that stock has all the way in the past 1 year gone from levels of around 136 odd to 374. So it's a huge mover. Not only on a year-to-date basis has it or rather in the past 1 year, it's gained around 175%, but on a year-to-date basis, which is basically in 2023, it's gained around 16%. To talk more about the company, and remember that it was in the news because it recently saw a major block deal in which the Kulkarni family offloaded stake and exited the company entirely. We have Gauri Kirloskar, who's the managing director of the company, joining in now to discuss all this and more. Gauri, hi, welcome to the show. If you could just explain to us the relationship of the Kulkarni family with the company. Were they co-promoters? What kind of strategic participation did they have in terms of management, and the reason for the exit?
Sure. So the Kulkarni family was part of the promoter group. and had equal shareholding as the rest of us. And last year, actually, they stated their interest is to pursue investments outside of the Kirloskar businesses, and therefore stated their intent to depromoterize over a period of time. They exited their stake in Kirloskar Pneumatic and Kirloskar Ferris at the end of last year, and most recently exited Kirloskar Oil Engines as well. So this is an amicable exit, and they have not been involved in the operations or the strategy of the companies for some time now.
Right. Gauri, just wanted to understand that, this was, of course, a deal which was in the works for the longest time. The purchase has been made by a bunch of funds. There's Nippon India, Max Life, DSP, Motilal Oswal, etc. The stated promoter holding by the last reported numbers was 59.42%. They've sold about 18%. So this dilutes the promoter stake as well, keeps it only with the Kirloskars. Were you all not tempted to go ahead and buy this stake? And is there a lock-in for these funds?
No, there's no lock-in for the funds. I'm not sure exactly actually what your question means, but there's no lock-in for the funds. Okay. And, we were comfortable with holding at around 40% is what our shareholding has ended up at. And we're comfortable with that sort of holding at this time.
Okay. So, Gauri, let's talk a little bit about the business. You all have reported a strong amount of growth, especially in your EBITDA in the quarter gone by. Your margins improved all the way to around 11% versus 6% odd. What led to that improvement, and can we expect these margins to sustain?
Sure. So actually the stated strategy of the company, which you might have seen, is this 2x, 3y strategy, which is our ambition to double our top line and also move towards double-digit margins. So one is, of course, the margin improvement has been due to the volume gain as well, because we're seeing very strong demand in the domestic segment especially, and also on the international side. There are three things that drive margins in our business, and that's actually export sales as the first one. The second is improvement in aftermarket or service sales. And the third is moving into a higher technology or a high horsepower product, which is the areas of focus that we have as of today. In terms of the long term and sustaining these margins, yes, we do hope to sustain these margins and improve these margins over time. That is our ambition. And I feel that with the focus on these three areas, we will be able to see that improvement over time.
Right. Let's talk some specifics with regards to the power generation segment, which grew about 23% in the last reported numbers that you had. What kind of contribution do you foresee coming from this business? And the second one, that CPCB4 norms, how do they impact your business going forward? What's the opportunity there?
Sure. So the power gen business today is about 38 to 40% of our overall revenue. And, we've seen very strong economic activity in the domestic market, which has been a tailwind for this business. The order booking actually continues to be strong. And I'd say that our current order board is averaging in the range of 2 to 2.5 times of our monthly execution. So it's a very strong order board, and it's really now about managing our supply chain as well as our execution of these orders. On the end customer segments, I'd say it's really coming from manufacturing, infrastructure. These are where the demands are coming from, as well as supported by telecom as well. On CPCB4, so this is an emission norm transition that is going to happen in July. And we have seen, of course, in emission norms transition years, there are several demand cycles that do play out. So there is a strong pre-buy expected before the emission cutoff date. And we will see that, and we're already starting to see the initial signs of that pre-buy that is expected before CPCB4. There is a significant price hike that is expected from this transition. And so we will see some softening of demand after this emission change takes place, and then we'll see it pick up over time.
And what about your MOU with RITES? What's the scope of growth there?
The MOU with RITES? Yes. Okay, sure. So, one of our key focus areas is the international business, as I spoke about earlier. And the MOU with RITES has really been signed to jointly explore business opportunities in areas of railway rolling stock, gensets, and joint development of products for global markets. Both of our organizations have complementary skills, customer bases, and markets that can be leveraged for mutual benefits. So RITES has a lot of expertise in design and development in industrial and infrastructure segments. And COEL, on the other hand, has proven products and an expanding global footprint. So we're exploring opportunities such as, refurbishment of locomotives or DG requirements that they may have in their international markets. Their team has visited our manufacturing plants as well, and now we're assessing, capabilities on both sides and seeing how we can meet these opportunities that we see.
Okay. All right, Gauri, you're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, during that conversation, we did have some news coming in the pharmaceutical space where Eris Life is going to be acquiring 9 dermatology brands from Dr. Reddy's for a sum of around 275 odd crores. This is only a part of the dermatology portfolio which is being acquired, so it's not the entire portfolio which is being acquired. The company says it's going to help them augment their cosmetic dermatology business. Now, the FY23 sales of this particular 9 brands up till Feb was around 62.1 crores. This compares to around 61.6 crores in FY22, and FY21 they did sales of around 52.8 crores. It's a small sum, but the larger picture is that Eris is looking to actually augment its dermatology portfolio because this is the second acquisition in the dermatology space since January. In Jan of 2023, they acquired 9 dermatology brands from Glenmark for over 300 odd crores, for around 340 odd crores to be precise. And this is the second acquisition which has taken place just in the matter of months in the dermatology space in the Indian market. Remember, Eris gets majority of their sales from India, and one of the ways to actually scale up growth in the Indian markets for a lot of companies now is to actually acquire portfolios or brands from other companies.
All right, and as you spoke about Eris, we had the European markets open as well, all of them opening with a gain of almost 1.5% on the front line indices there. And Credit Suisse is one of the stocks which is seeing a big recovery after some sort of backstop arrangement was made. So in the pre-open, it was up around 7%, but now as we speak, it has rallied over tens of percentage points, closer to 40% as I see it right now, though we will need an update on that one too. Take a short break, come back, we focus on Z Entertainment, a stock which was the biggest gainer in the last 20 minutes or so. Welcome back. You're watching us here on Midcap Radar. The stock under the Midcap spotlight is Z, and that's primarily because it's seen a big move in the last 20 minutes. We got a note coming in from Bloomberg saying that they are set to repay IndusInd about $10 million. Remember, the company has been settling all the dues in the recent past. On 8th March, they settled disputes worth nearly 211 crores with the IPR, Indian Performing Rights Society as well. And all of this is on account of the company's target or a goal to go ahead and merge with Sony. The next NCLT hearing where the merger proceedings begin will be on March 31st. But before that, there will be the NCLAT hearing on March 29th. Now, assuming that the company goes ahead and pays IndusInd Bank, then that will be a non-event itself. And if that happens, then that is a big trigger for the stock itself, primarily because it is at an inexpensive valuation level, close to around 16 times 1-year forward price to earnings, even if you account for the delay in merger and lower revenue growth due to negative impact of ad on account of uncertain macro environment. So a lot of obstacles off the way, and as a result of which the stock up 7% on favorable valuations. With that, we're out of time on this edition of Midcap Radar. You stay tuned to CNBC-TV18.